Hey guys, hope you guys had a good day trading. I've been off for a while with on vacation. Haven't been able to do a video in a little bit, so let's have a little video here. So a little bit of the update, kind of cover quite a few days here. So we put a new supply in. This is on SPY, 457.9. We came down. We took out some previous supplies we had in here. Most recently, we put a demand in. At 446.7. So where we're at right now is we have this orange kind of longer term bear channel, which started on July 24th, but we also have this slightly more extreme black bear channel, and this started, actually, I don't know why my line got messed up here. This should be right there. We have our black extreme bear channel that's a little more short term, starting back on July 28th. So if we hold true to our orange channel, our support should sit around 444.4. However, our support for the black one, that takes us all the way down here into the 442s. Now, most importantly is the resistance. 449.5 is the black bear channel resistance, and the yellow or orange could go all the way up to 453.4. The most important thing I see here is the fact that we lost the 20 EMA. We actually had three consecutive closes under the 20 EMA. First time we've had that, I think it was since March. We tried to retake the 8 EMA yesterday on Monday, could not do it. Today we actually had that huge gap down, and then we came all the way down. We attempted and we looked pretty strong to close under our 446.7 demand. However, we ended up finding quite a bit of support and pushed higher. So where we're at right now is that we have 450.8 and 446.7 as basically our major areas to watch. We are going to keep an eye on those. If we can close back over 450.8, which would be the 8 EMA and 20 EMA, then we're going to start looking for that move back up to the high 450s. However, if we lose, especially 446.7 demand and close under that, we very likely are going to come down here to the 50 EMA and look for a touch, which that sits right here, right now, about 441.2. We also have a previous supply down at 443 that we could take out. Going over to futures here, same thing. Yesterday I mentioned this nice potential double top on 45.40 that was setting up. That did play out really nicely. Same thing, we look to be having a massive bear engulfing candle. However, we had that huge pop. We were able to hold 44.97 demand. So pretty much if you look at futures, we have a 45.40 to 44.97 consolidation. Until we take back 45.40 or close under 44.97, really there's no good play here. Now you look here, we are about to get our first bearish crossover on the 8 and 20 EMA for futures and SPY likely tomorrow too, for the first time since May. So that's a pretty big deal. If we continue down, our major target realistically is going to be 44.37. Now, if you go over to the Qs here, same thing. We have our orange, kind of longer term bear channel that we've been holding in, but you can see today we actually poked through that. Now, most important thing I see here is that we have put in the 372 demand that was back on August 3rd. Since we've done that, we have actually had 1, 2, 3 closes directly on it, basically, or candle bodies directly on that support line, and we actually had a 4th candle bounce off of that. So 3 out of the 4 last trading days have found support at 372. Now, keep in mind, this was a previous supply area, so turning previous supply into demand is pretty bullish, generally speaking. And you can see back here, this 372 area, this is where we had trouble getting through initially. You can see we had some rejections here, here, and then we finally popped through it. So basically, we're kind of back testing support right now. And we actually got not quite a full, but almost a gap fill back to the July 11th candle also today. Things to keep in mind here is that tomorrow we are most likely, if we have some sort of huge green day, going to get a bearish crossover on the Qs, which that generally does lead to a bigger correction. Our 50 EMA is going to end up being right around that 365.9 demand area. That's the support from back here in early July. Realistically, if you look at it, I would not take a call until we can pretty much take back 375.7, and I wouldn't take a put until we really hold under 372. We're kind of in some nice consolidation here. You can see we have our black bear channel that's kind of trending down right now. That support obviously is all the way down here. We push through this orange one, so we'll go ahead and get rid of that support, and it kind of gives us a pretty much either a potential bull flag or at least at minimum a symmetrical triangle that could be a big breakdown or a big breakout. Now keep in mind, tomorrow is pre-CPI day, so on Thursday markets are going to get a new CPI. I put the analysis in my daily TA, the written one. As of right now, the best case scenario is a miss on year over year CPI and unchanged on CPI month over month, core year over year, and month over month. Those are the best case scenarios right now. Worst case scenario is a pretty big miss to the upside. And looking at the way rates are priced in right now, I don't think markets are going to react too friendly to that. Taking a look here, we are going to go over to VIX now. So I have had this red channel right here for quite a while now. But what actually, interestingly enough, happened is that we did come up and we were able to turn that into a new supply. So that shows you how powerful some of these channels can be. Now, the most interesting thing for me today is the fact that the VIX, as you can see, had just an absolutely incredibly long wick to the upside. Now, the VIX at one point, which obviously probably resulted in why SPY had such a large move back to the upside, but you see here we have this long wick here. It was up almost 15% at one point. So you can see we finally pushed through this red bear channel. So we're gonna go get rid of this one here. So now we're gonna hyperimpose our last bear channel. You can see how high that is. So this is just kind of your overall trend of the VIX now for the last, I guess 2 years, almost a year and a half now. You can see we've been in a huge downtrend here. So this will be interesting to see if we finally start a trend up or not. Overall, though, I expect the VIX to have a green day tomorrow, mostly because it's the pre-CPI day, and 5 out of the last 7 times the VIX has closed green pre-CPI day. So be interesting to watch what happens. Key levels to watch is 17.1. If we drop through all the way to 15.5 here and take out this bull channel right here, then most likely we are seeing the temporary bottom on SPY and the Qs, and we're going to look for a bigger move back up. All right, hope you guys had a good day trading today, and I will see you guys tomorrow.